Hey there, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, August 23rd, 2023, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader viperxl 007, and we are going to take a look at price action and charting in an index this week, specifically the Russell, as it is one of my favorite things to trade, and I feel a little bit not so confident in my ability to chart different levels and what the heck I'm looking at. So we are going to focus that. It's going to be kind of a live workshop session, not going to have a lot of edits to it, so you might find it kind of boring. We're going to touch, before we get to that part, on some of my treasury plays that I opened up from last week's episode, where we worked on fixed income and understanding US Treasuries. But before we hop to all that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. You can also pick this up at wherever you get your podcasts. And if you can't find it there, let us know and we will get it there. Also, there is a link, thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. But let's hop to this week's content, Viper. Viper, before we hop into price action and all that comes with that, I did want to give a little bit of an update from last week's episode on fixed income and US Treasuries. As I mentioned in that video, towards the end of it, one of my portfolio strategies is I keep a decent chunk of cash, anywhere between 25 and 50% of my total net lick of my portfolio in cash. That is primarily because I do a lot of option selling, and that deals with a lot of buying power expansion, and so I kind of have to keep some extra funds there to soak up some of that buying power expansion, so it doesn't really go on margin, and I get charged margin rates and things like that. So to keep flexible and give myself some breathing room, that's pretty much what you kind of have to do when you do a lot of option selling with undefined risk. If you do defined risk, you don't really need that extra buying power expansion, because defined risk is well defined, and so it doesn't really expand to fill the void like the undefined risk trades that I tend to take a decent amount of. And one of the things I mentioned in that episode that really frustrated me is I felt like I was wasting cash, or wasting the opportunity to do something with that cash. And in 22, I had taken a lot of that cash and I bought equities, and I sold some options on equities, thinking, oh, these are big blue chips, they're not going to go down much. And then the market slid by 33%. I got into a whole buying power expansion margin nightmare. Been kind of crawling out of that. That's well behind me now. But one of the things that really intrigued me about the US Treasuries was it appeared that I could purchase short-dated treasuries, 4-week treasuries, without really any impact to my buying power. And so I've been kind of doing that, and I did want to give an update that I did confirm with my order last week. It was a pretty substantial order of 4-week treasuries, such that, the normal fluctuation of my buying power, I knew that this chunk would have impacted it. And it didn't. Probably impacted it about $30. And this is wonderful news because those 4-week treasuries that I bought were yielding a little over 5%. I think it was like almost 5.25% yield on those 4-week treasuries. And I still have that buying power expansion cushion that I talked about in case, my option premiums need buying power expansion and need to kind of soak it up. Yet I can deploy that cash in US Treasuries, so it's not just sitting idle doing nothing. So I just want to confirm it did work, and so I'm excited. I'm now tomorrow, I will be in week 3 of my Treasury ladder. So I have one more week to go, and I'll have a full ladder. The idea is every week, because those 4-week treasuries are sold weekly. So every week I put 1/4 of what I want in treasuries out there. And then by the time week 5 rolls around, that first batch will be coming off, and I'll just recycle it back in and compound that cash on the sidelines with US Treasuries.
Yeah, I mean, and I gotta say, the more I think about it, the more I really like this ladder. This keeping that spare money, not spare money, but just keeping that capital that had a purpose, has a very specific purpose of absorbing that buying power impact. Being able to put that to work, like you've said, like you laid out in the episode, is really cool. I mean, it's one of the things that. I encounter in various crypto plays or things like that. Not coincidentally, because like we've talked about, crypto is like everything on fast track of what happens in fiat and in equities and whatnot. But the plays that I really like over there are exactly this kind of thing. Like I've talked about before, as far as lending protocols, where I can put, like, if I'm making a long-term play on a particular token or something, I can put that into a lending protocol and then earn a yield on that while it's just sitting there. Very different things, but still the idea of, hey, this is just sitting here. Can we do something with it? So I think that's pretty cool.
Yeah, I'm excited about it, and we'll keep you posted on how it goes. Another week and a half, and I'll be pulling that first one off and going around the merry-go-round again.
Yeah, I'm interested. So you took note of, well, I guess, so how does it show up? Did you just take note of initial investment amount, or were you tracking number of bills, like to figure out how much the compounding adds up over time? What kind of tracking are you doing for that?
So I'm just kind of assuming my brokerage will track all that. So when the sale was finalized at the end of the auction, it shows up just as a line item in my portfolio, same as a stock ticker. It's a lot longer. It's got like 4 numbers, 3 letters, something like that, and it has an open position price, and that is the price that the auction cleared at. So I think one of them's like $99 and 5.56822 or something like that. And then the next one has, a different price. It cleared actually even lower because the yield was higher on that second week of treasuries that I entered. And then basically the platform then shows what its current value is. When that closes out, basically it will clear at $100 par value. And so I'm assuming that the brokerage is just going to keep adding these all up under the bond category, taking that differential of what I bought and then what it got repaid for.
Okay, that makes sense.
So I'll recap some of that stuff as we kind of move along in the adventure of the U.S. Treasuries. But I want to hop this week to indexes and price action. And the reason I'd like to just touch on this, and maybe this will be boring, and so if you're one of those people that don't like to listen to a working session, then, I guess tune off and come back next week, because we might be more interesting then. But Viper spends more time than me kind of charting price action, and I have been, I'll say I got burned last time when a lot of the indexes in the market started trending down and I was really positioned long. And I've been trying to keep more in tune to the indexes and where they're headed based on price action. Since then, I won't say that I'm very good at it, but lately has been quite the slide in indexes, both the S&P and the Russell. I'm a little bit more partial to the Russell when it comes to some of the trading that I do, which is premium selling, because it tends to be a little bit more volatile than the S&P. And that just kind of lends itself better to premium selling. And so I've been tracking the Russell probably a little bit closer than the S&P. And I thought I would maybe try to bend Viper's ear a little bit on some of the struggles that I've had when it comes to price action and where I draw levels and where I guess have difficulty.
Yeah, and I mean it's something that, as I constantly say every time this topic comes up, and I will constantly continue to say, and I will say right now, this is very much probably my most rapidly evolving, or at least changing. Evolving, I guess, implies that it's positive. I think it is, but still my most rapidly changing skill set thing that I do a lot, and I try to, I do it on charts that I care about, but I also, just at least once a day, I throw down a chart on something. It tends to be something like I said, I care about, but if it's a slow day or I don't have any plays where I really want to pay attention, like I'll try to grab something. So it's really just kind of doing that muscle memory thing. So that's also to say, I think I have some angles that have been alluded to in the past, but never quite put together. I've kind of unlocked in recent chats in the Discord, plug in the Discord to the productive chats we have in there about this exact topic. Probably one of the most talked about topics in Discord as well. There's been some recent mental unlockings in my head as far as ways that I look at charts. I've done a handful of charts with this thinking in mind, and it's actually been playing out fairly well for me, and I'm noticing an uptick in some win percentages with it. So I think I might have something we can work with here.
So maybe I'll just pose the question to you, Viper, and you then kind of respond to it with, I guess, however you see fit from the chart perspective. But one of the things that I mentioned is I like selling premium volatility on the Russell. And lately I've been watching the Russell slide. And with that comes increased volatility to sell. And I started saying, okay, what's going on with the Russell? When's the all clear, or when is it safer to start entering like a put, which would be a bullish position, or when might I take out a bearish position on it? And so I posed the question to you, given this slide, if I'm going to put a trade on tomorrow on the Russell, do I go bull? Do I go bear? And where's my context guidance on that?
All right. So right away, this is just how the chart loaded. So it loaded on the daily. This time window is like we're chopping all over the place. So what I want to do, the very first thing, some of this is because I know this is an index. And so this is a very liquid thing. There's a little bit of nuance in the whole like gap filling thing that, you want to chart some stuff like that or notice things like that if they apply on an index. But since this is an index, because it's so liquid, because it has such really long history, the very first thing I want to do here is let's just jump out to the monthly just to get an idea of what we're looking at. I only want to chart out here if it's relevant. So if we look at on the monthly here, nothing sticks out. So here's a couple things that stick out to me. So the one thing that unlocked recently that I'm going to try to continue to contextualize in various ways on the chart is just whenever I do a chart, the question I'm constantly asking myself is, where is the most recent failure and the range of where that failure happened? And if we're trending up, or if we're trending down and like we just made a new local high or something like that, where did that most recently start from? Because we want to defend what we've already achieved. So if we had a local high swing, we want to defend where that started. And if we had a recent failure, we need to regain that. And these terms go both directions, whether we're going up or whether we're going down. So the one thing I like to do, which, I'll probably put these levels down here, but then I'll end up deleting them because I'm not seeing anything that's super helpful on the monthly. But what I do see, if I go ahead and grab some lines here, so we went down, we put in this local low or all-time low, and then we went up and put in an all-time high, and we're coming off of that. And then we kind of had this sideways chop here. So what was interesting to me in this sideways chop is we had this local low here, and that failure, and it was a failure because we came down, we had this green candle up, and then we failed to get a new high. So that failure started, and so what I like to do is just wrap we'll just kind of nice and neat wrap that candle that started the failure move. And this is a little subjective because we're on the monthly. And that's also why I'm not going to keep these lines on here. But one thing that makes a little more sense, hopefully on this chart when we get a little more granular, is this idea of kind of wrapping this candle here, because we need a range. The failure happened in a particular range, especially on these monthly candles. Like this is a pretty decent range here, 1845 to basically 1890 or 1890. So that's a range where we failed. So we failed.
But why do you pick that candle as the failure, right? Because technically you failed to get a new high before that.
So that's a good point. I don't think it applies how I'm thinking it, how you said it, but I think slightly to your point, the candle that failed was this big red one here. And I don't know if that's the candle you're referring to.
No, go backwards in time, right? So you got two green candles there, probably in January or something like that.
Yeah.
Right?
Yeah.
So you're kind of reversing there, but then you fail to go higher.
Yeah.
At the candle after, like there in February and April. So
yes.
Why do you skip over this one?
Because this one failed, and then it put in a low right here. The red candles, we came down, we put in a low here at 1712. And then we got a green candle. So we put in a low, and then we started to climb back up. So we made a new attempt, and then we failed here. And this is the failure that matters to me, because this is the one that is now the lowest low, the lowest, most recent low. So
you're saying you care about that. So the reason that move was interesting was because you started on the right side of the chart and went backwards to the left and said, oh, here is the lowest, the first low working backwards.
Yeah.
Like, why did I guess?
Yeah. So I'm looking for where is our current, because in any chart you'll have a current or a local low. And so the first thing I want to see is where is our current local low. I don't know if that's quite the right phrasing, but just, in a swinging direction of down and up, where are we at on a high and where are we at on the lowest low? So if I back up a little bit, I would say, well, okay, clearly we have our high, which is also all-time high. And we have, since we achieved the all-time high, we have a current local low right here at, say, 1670. So this is our big picture range currently, but that range doesn't really help us because that's a huge range. But that's at least the range we're playing in. So that's how I kind of narrow that down a little bit.
Okay, so you're calling that what you call the local low, as basically you're saying here was our high, which you picked as happens to be an all-time high, but
yeah,
arbitrarily it's just the highest point in whatever you're kind of looking at there. And you're like, then the next lowest point is here. So then you work backwards from that lowest point to say where was that failure that drove you to that local low, for lack of a better term.
Yeah, essentially. And again, because this will apply on every time frame we look at, the main purpose of this is just what is the region of interest. And so it's exactly like you just said. It's that high point. It's the low point. There are more regions of interest, like the swing that made the all-time high. There's a ton of interest down here, as that happened. But all of those regions of interest are even lower than the current local low here. So they're not really in play so long as we defend whatever the most recent failure was. So I'd want to say that just because, this is when you do the price action and the chart reading and stuff, it changes. Like everything is so fluid. If we get a failure of the range that I'm currently most interested in, then we have to know where's the next one. So The range of interest right now is what happens to be all-time high and this local low. And because we're on the monthly candles, like I said, this spans a really big, a really big gap. But it at least gives us like already, this kind of gives us a little sense, right? We came off this high here. We definitely went down, a little uptick down, a bigger uptick, but down. And now you can kind of see this trend forming of a possible reversal, at least on this very high level. So from here, this at least just kind of gives me, just some guiding idea of the very, very big macro level, because within each of these candles, there were tons of wild uptrends and tons of wild downtrends, because the deeper you go into a chart, the 4-hour chart could be just ridiculously trending up, but yet the monthly is ridiculously trending down. And that's just a factor of how much time is wrapped up in these candles. So the only thing I wanted to grab out of this monthly chart was, what does it look like? Where's a failure that I care about? And it happens to be right here, 1890 to 1845. I guess for now, until we go one level deeper, I'll leave these pink lines on here just for a second. So I'll take a step into the weekly. And again, this isn't like weekly candles are a little too much for making a trade based on, but again, it's just helping us continue to paint, the picture here of where are we at on each of these time frames. So going into the weekly here, I can already see I don't really like still having these monthly levels here, so I'm just going to take these out. The monthly levels were good enough to show us on a monthly, like a really long time frame, we might be going into an uptrend. But when we go into the weekly here, those levels weren't really meaning a whole lot. So if we take a look now, man, we are chopping. Did I mention how much I love index charts? So we're going to do the same exact exercise though. We're going to say, where's the swing that took us to this low? So this is going to sound very familiar. And where was the failure of that? So I did leave this pink line down here because coincidentally the bottom, actually on a weekly basis, we kind of had this perfect double bottom here where both weekly swings came down to the same exact level. So this is a slightly new for me. So let's make some stuff up on the fly here. So that didn't technically set a new low. It just set the same low. So if that's the case, I think the logic would follow the first time we hit it, that was the failure that we particularly care about. The second time, we're just testing. We didn't actually put in a lower low. So let's focus on this first low here. And let's go up and look at where's the candle that, let's wrap that candle that took us down there. And this is where I think maybe this will make a little more sense to you, because I agree that monthly chart was a little rough. So we're looking at this low. Let me get a little more helpful. Get my brush out. So we're looking at this low down here as the most recent, as our current. So what happened to take us down here? And that's what we need to regain to signify a reversal. So if we work our way up the slope here, we had a previous low right here. So this is a little cleaner. I want to wrap this red candle specifically. Let me go ahead and do that. So I'm wrapping this candle for a couple reasons. One, because closing candles are king. I've gotten burned so many times on making trades or doing things on an open candle. And honestly, there's a one of the guys in Discord has learned a ton from a popular streamer. His name's Skinner, and he just has a ridiculous amount of experience with price action, day trading, all that kind of stuff. So it was crazy watching him. So he does live streams, and it was crazy watching him in real time, trade the indexes. And to like, he would do what I'm doing on like a 1 minute chart, or no, I think he usually does 3 minute charts. And that's when everything really started to click for me of like closing candles, because he would have a range charted and the price would shoot up through the range, but there would be literally just like 30 seconds left on the candle. And he would just sit there and he would say, not yet, not yet, not yet. And then all of a sudden, like, I don't know, like scripted, all of a sudden price jumps down and the candle closes below the range. And he was like, there you go. We're rejecting off of it. And so I was like, oh my gosh. So all that to say, this candle here is the one that closed below this low that came before it. So therefore, this is the candle that failed. It wasn't this green one before it, because this one tried to get up, and it could have, like the candle that followed this green one could have continued the trend up. It wasn't the red one before it, because it came down and it closed still higher than this low. So again, it could have continued to push up. So the range I care about is this candle, and I chart the body of it as the range that we care about. So if I'm really crossing my fingers and hoping that this worked. If we zoom out and then see what the price action looks like on this range. Oh yeah, that looks nice. So I think it worked. I think that was a good range to pick. So what we see here now tells a slightly different story. At least different than that monthly, where monthly, it was like monthly, we might be turning up. We still could be, but again, you got to think how big those candles are. So we came down here and we hit our low. We went back up, and now, hang on, let me back up. So now that we have a range identified, and this is a failure range, and it's a failure because we're looking at this with a long bias. So the thing we want to see, now that we have a critical range identified, is we want to see the price gain and then come back, test the top of it, find support, and then let's get out of here and keep moving on. Now, it's, doesn't necessarily always look that clean, but that's what we're trying to see in our minds before we can really shift into a long bias. And I say that because if we flip the chart and do an inverted scale, and we still look at the chart with that quote unquote long bias, and nobody tells our brain that we're actually looking at this upside down. This kind of doesn't look too terrible for a long bias, and we're upside down on it. But that aside, so what we're looking for is to gain the high side of this range. And you can see we've tried 3 times now to gain 2002. Let's just call it 2000. But it's actually sticking pretty well to the ranges. And there's 2 things that I see of importance here and how we're sticking to these ranges that we drew here. We came down, we hit the low the first time. We came up and we rejected off the high side of the range. We came back down. We hit the low. We hit the same low. And then we did a little shimmy shake on our way back up, but we went ahead, we tried again, and we failed. And we actually failed with a lower high, which wasn't great. And then we came back down. Now, here's something that is interesting as far as, to me, a range gets tested, let's say, 4 different ways. Doesn't have to clear all the tests, but there's testing it from the bottom. So there's the top of the range and the bottom of the range. And then both of those can be tested from the top side or from the bottom side. So what I think is interesting here is, and this is just more so what I will view as confirmation of my range, is we can see on the second test, we kicked off the top. We actually lost the bottom side, and then we tried again. And now we failed on the bottom side. So that failure right there, which we can't really see on the weekly, but I bet we'll see it a lot better on the daily. This failure off the bottom side says, look out, lower lows are coming. And sure enough, that's exactly what we got. There was a low here on the swing on the way up. We rejected off the bottom side of this range. So that says the probability is in favor of at least going lower than 1770 in this case. And sure enough, we did. We closed at 1736. So that's an interesting little nuance. Once if you made a good range, you'll see a lot of various reactions like that in it. So now fast forward. Now we're going on our third attempt, and even though that lower low that we made there, 1740, it still didn't breach the bottom of the range that we care about, that we charted all the way from the monthly. So at least we haven't lost that. We go up again, we make another attempt, we fail off the top of the range, and now we're in kind of a repeat scenario of what we had back here, where we've officially lost the bottom of the range because we just had a closing candle close down here at 1886, and now we're kind of waiting. And at least on the weekly chart here, there's no play to make. And now that obviously could change as we drill in a little closer. But what I mean by that is if we lost the range, but we haven't come back up to test the bottom or see if we gain the bottom of that range there. So the play right now on the weekly chart is to wait and see, how we react coming back up. So we haven't made a new low yet, so that's good. But to me, we wait and see if we actually break down for a new low or if we come back up to test the bottom side of that range. But again, we're on the weekly. That's not really a great chart to make plays on. But again, I'm just drilling in the exercise here because it's going to look exactly the same. We'll drill down to the daily now, and now we're getting into the realm of making plays. I really like how that weekly range played out. So we're going to hang on to that because I think that is the key critical range of importance here. So we'll leave this bottom on here, and we're going to do the same exact thing we just did, except now I'm not going to really care about this action back here because now on the daily, that's too many candles ago. That's history, but the range still matters. So we're going to just come in a little bit closer here and pay attention to most recent action. And so real quick, the only thing I'll look at historically is there was a low all the way back here in that range that I said I don't want to pay attention to at the current moment. We went up, we tried, we failed, we came down, and now we have this chop here, which is higher than that previous one. So I'm going to zoom in, and we're going to look at this right here. And we basically do the same exact procedure. Actually, we'll back up just slightly because we want to catch the failed candle, because this was a local high back here. Big picture, like we saw on the weekly, this was a failed attempt to gain a new high. But now that we're zoomed in, this was a local high, and we failed to hold it. So let's go ahead and slap a little candle wrapper here for a range we care about on the daily. And
I would have guessed the right candle. That's the one I was going to guess.
It's the same exact procedure, and it actually looks very similar to what it looked like on the weekly. You had a little shimmy shake, and then this candle closed below, so this is a failure. So that's what we need to regain. Now let's see how that played.
You should change the colors of those lines just so my brain doesn't get confused.
Yeah,
because you drew those
a
little bit more zoomed in.
I'm going to make them even bigger because we're getting closer to making a play. So let's make it more impactful. So big bright yellow. So now this is where I think we should be able to make some plays or at least spot or wait for some plays to set up. Let's see, same exact thing we did on the weekly. Let's see how this range holds up. So we lost it. We came down here. We could do this same exact experiment down here, but I'm not going to do that right now because let's just keep going forward here. We came up, we gained, we put in a higher low, so that's fine. We tried again, we failed, but we put in a higher low, so that's fine. Now we came up and gained it, which is good, and that puts in our local high. Now, big picture, that actually peaked just up out of the high side range, but that's fine. Now we're failing, or we're slipping, we're losing those levels. We've actually lost straight through. All right, so when we zoom in a little bit more, let's look at what's happening. And this is where closing candles are so important, because what I immediately see, if this candle was closed, is like, we rejected off the bottom side. So put those call orders in, get those call options out there. We're rejecting off the bottom. We're going lower. And that's true if this was a closing candle. This is a pretty good rejection off the bottom here, except for the fact that as of this recording, there's 20 hours left on this candle. So do not make plays based on that, because in 20 hours, the candle could easily gain like 0.25%, 0.5%, and all of a sudden it could close up into the range here. And now that's looking like a completely different play. But nonetheless, if we were pretending like this is a closed candle, this is actually a very, if I jump back to the weekly, it's a very similar situation that we saw back here, where we came down the bottom of the pink range, we came back up, we kissed it, and then plump, we dumped off of it. So if I were to finally answer the question, I would say that's the range we care about. Currently, we have not lost a low as far as the range that made our local high here. So let me contextualize that just a little bit more. So the swing, the move that started our local high here, technically it would be all the way down here on this. So we're, again, wrapping those candles. I wrap the candle that went down, and then so the red candle that hits the low. All right. So there's a few, this is an area where there's probably some nuance and learning I need to do on that basis. But that's pretty far away. So that's when I go back to talking about ranges we don't care about yet. To me, the range I care about as far as what we really, really need to hold is going to be this particular candle. I'm going to change these colors too. We're going to change these to like green, because we want to hold this range. And then ideally, we don't even want to mess around with the mid of the range. And I'll explain that in just a second. Let me finish. Let's really drive this home with colored box in here. Okay. So what I mean by all that, like I said, we could have dug into this cluster down here. That's perfectly valid. But again, that's a little far away, and this is a stepping game. The current step is we started down here, we put in a local high, we pulled back, we put in this low, and then we continued to march on for a new local high. So it's a stepping game. This green range right here is the range that we do not want to lose, lest we go lower. And so what I meant on, because now this is what we really need to defend. So those are kind of the two different vocabulary as far as the failure we want to gain and protect it. Whereas this green, aka where a swing started, we want to defend that. And so we started here in this red candle that came down, closed, locked in this low. There is some action here where we defended this range over here, but that's getting into the weeds a little bit. And then we marched on up. So What we would like to see, a really, really clean defense, would be that we came up, we come back down, and we hit the top, and we get closing candles above the top, and then we start marching on up. Like, that's a really clean, good, strong uptrend. But that doesn't mean you can't have candles in the range, and this is why I think ranges are important to chart, not just a level, because in this range we haven't lost the bottom of the range, so that's good. It would be pretty bad if we drop out the bottom here and get that close, and that's bad because that is a new local low, which again, I mean, I'm saying bad, but it depends. It's all directional. So this range, we came down, we tested the bottom sort of with a wick. The candles could close closer to the bottom, but we have gotten a close back up above the range. So again, like, just think of this in like hot potato terms. We came into the range, that's fine. We got to close back out of the range. I kind of don't want to go back in the range. You start to look weak then. You like kind of playing a little bit of projection, but kind of projecting some things like that. So all that to say, currently, I still don't know if there's a play here, especially when we get into when you get into the nuance of making an options play, because this candle's open, which means it could go up. And if we get a close in this yellow range, then things are looking good for continuing up. But this is an important candle that's forming right now because it could close as a red candle here, somewhere in here as sort of a rejection off the bottom side of this yellow range. And then all of a sudden, we're doing that waffling thing, and that's not a sign of strength in how the chart's developing. So I feel like a lot of charts come down to that.
So why exactly are you focused on that candle that's not quite closed yet when you have a red candle just below your range, your yellow range, that technically closed below it? Like, why is that not considered a rejection? Yeah, that one.
Because the momentum was swinging down. To me, and again, this is my current understanding, but could always change. The rejection is when we actually challenge it. So if we're in falling mode, then you're just passing through it. I mean, that's still not necessarily a good thing. So there's still some context there, but you're not actively charging at it to challenge it. If you're in free fall coming down from the top side, the challenge is to find support. So we clearly didn't find support there. And so, perhaps that's a potential failure to pay attention to, that we didn't find support. But then you have to ask yourself, was that support significant, or was that support important? And currently I would say not entirely, because that range, it's not defending, it's not the green range. The green range is the range that actually took us up to the local high. So that's the more important one, that we don't want to have that waffly support on the bottom of this green range. Now, the thing I kept stuttering on, and I don't know. This is a big swing here because we are on the daily chart here. So it is quite possible that you could actually move this green range, and it overlaps a little with the yellow. So that kind of makes it a little confusing. So let me just kill the yellow, because I think we're done with the usefulness of that. I think this is a very, very valid. Actually, that looks pretty nice, doesn't it? I think this is a valid range as well, because, and this is where I try to continue to have better discipline. I charted this one because I was like, well, the move started here and went up. Well, yes, but also we had this swing up and then we put in a new local low, a higher low. So, I mean, in some aspects, this candle here could create the range we really want to hold. And that kind of looks a little more clean, right? I would probably find, like, I like to do these charts and then just leave all this mess on the chart. and come back and look later and then be like, oh, I totally nailed it. So that's good. That's confirming, that's affirming to my thinking. Or it's like, well, why did it break down? So because I did debate this when we were going through it, I do like using this candle as the range here. We came back down. We're getting a test off the bottom of it. It's still, I don't want to see it hanging around here. And we're still in a similar situation, even when we had the other range up, as far as this candle that's still forming. When you do slip, so that's again why I was saying that it's a lot stronger to bounce off the top and get support off the top of the range. Because if you slip into the range, it's not the end of the world, but it is potential weakness. And so this candle that's forming, we still could come up, get a close below, and we could come rejecting off the bottom side of the top of the range. And now that looks really weak. And I would actually probably think there's a play to make there, especially with options when you have theta and you got to factor all that in. That rejecting off the top of this range, could open up a call side, selling a call side play there. But it's, it doesn't have to end at the daily. You can always, go down into the 4 hours, and, you just do the same exact procedure. And on the 4 hour, so I'll make it a little quicker. On the 4 hour, we're in this slide down. And at this point in time, we'll leave the green range up here because we know that's an important range on the daily. But for all we care about now that we're into like this granular level of 4 hour candles, we really only want to watch the slide down. And are we doing anything meaningful on the slide down? And so far, we're definitely not. Or at least, so what I mean by that is this is a hair's edge technicality, but I'm going to go with it. Doing the same exact.
Oh man, the internet's going to record this.
Yeah. But all right, you're gonna make me prove it. We're gonna get real zoomed in here. That's a lower close, right?
Yep.
All right. So it's the same exact thing. I'm just speeding it up a little bit. We're gonna wrap this candle. There's our range of the most recent failure. Well, is that the most recent? Came down, we hit low. Man, what is it with this thing in the double bottoms? Nailed it again.
Tap tap.
But this is feeling like the same exact chart, just from all the way at the monthly down to the 4 hour. But so now that we have that, let me kill this green range because it's getting a little crowded, but we are making mental note of the range I just deleted. So now I wouldn't go any lower than the 4 hour. The 4 hour is about as granular as you want to go. And now here's what we're looking at. It's doing, let's put it this way. It's doing the right things it needs to do to potentially signal a reversal. And so maybe this is where you want to be. The daily gave us some indication, but the daily was a little indecisive. The 4 hour here, depending on how the next couple candles go, will be much more decisive on potential plays to make. So we wrapped this candle. We, did some chopping around down here, and we've actually gained the bottom side. So step one, that's positive. We gained it. We didn't flood around with, testing the bottom and getting kicked off of it. We gained it, and now we're coming back down. So what we really want to see is to get support on the bottom side here, start heading up, and ideally passing through on the up way, passing through this 1880 here, because again, sign of strength. And when we're talking about a reversal, you really, really, really want to see that strength rather than, action where you kind of ping pong in this range is fully valid, but it's just not as strong as We pass through the bottom side, we can come back, we can totally test it from the top side. And then we would really like to see passing through the top side, and you can potentially then come back and test from the top side here. So still a waiting game, but at least on this level, we now have a pretty clear play, I think, as far as what we want to see from the next few candles here, and then react accordingly with what our play is going to be. Let me say one thing. The only reason I don't always start way back at the monthly like that. I kind of wanted to do that just to show the iteration of the same exact thought process. So we absolutely could have done this, what we just did for the final bit on the 4 hour. This is honestly where I am most likely to start, especially if I'm ready to make a play. I'm just going to look here on the 4 hour. I'm going to say, all right, we're in a downtrend clearly. So what's the important thing that needs to happen in that downtrend? And then we just jump straight in here and do exactly what we just did with this particular range on the 4 hour. And then if I need that extra context, zooming out to the higher ranges, I'll do that. But honestly, right here, this gives me all I need to, set up a play. So I don't know if that helps clarify anything, but just living on the 4 hour chart is perfectly fine. You don't really need that higher context unless the 4 hour chart isn't giving you enough. Then you can step back a little bit and see if there's anything setting up back there.
Yeah, I don't know. I guess I'll just practice this more, because I always feel like you're always going to be not sure at the end. I think you're always going to end up let's wait and see. So you wait and see.
Yeah.
And then you're like, well, let's wait and see. Because I think at the end, it's always could go up, could go down.
Yeah. So that's a really important point. To the point that's something I struggle with on the daily, and I talk to one of the members in Discord about it all the time. And it's 100%, it's confidence. And it's because you're right. Like I get paralysis regularly of like, okay, so everything I just said about this 4 hour chart, I'm like, all right, so here's what I needed to do. I needed to confirm that this is support. And then we start going, and then all of a sudden I'm like, wait, okay, I did it. I called it. So I went in back there and it's gone. So it's 100% a confidence thing. And so what I mean by that, let me just see real quick. If we just jump into, let's just go crazy on like the 3 minute chart. All I'm trying to do is show.
Oh, jeez.
All I'm trying to do, pretend like it's the 4 hour chart.
Well, I can't. There's too many.
Well, you just keep zooming in. All right. That maybe the 1 hour.
We're going to go to the 1 hour from the 3 minute. Oh, you're killing me, man. This is the other thing that drives me nuts is switching time frames. When do you do it? And you're just like 3, 1 hour, 15.
Yeah. I still 4 hours, all you need. The only reason I'm doing here is because I was looking for a potential setup. Actually, we're going to invert this. Just to showcase that confidence bit. All right, so here's all I mean about the confidence. And this also plays into everything else we talk about, risk mitigation. And this is the other thing we talk about not being financial professionals. So anything I'm about to say, don't run out and make this play.
Too late. I'm buying right now.
So the bit about confidence and is that, okay, we wrapped this candle here. We came up. We're coming back down. If we get this candle to close in the range here, then as long as the candle closed and we start the next candle, make the play. Take the trade. And the reason you do that is with the risk mitigation. So this is where I'm purely going to talk about just stock plays or just spot buying plays, because there's the potential, and nothing is guaranteed. There's the potential that this has already proven what it needs to prove to potentially continue to go up. There's obviously some nuance to that in the fact that we never gain the high side. So perfectly valid to wait until we actually do what it's doing right now on the bottom side. Wait until it does it on the high side. That's probably the better, more fundamental play. But nonetheless, if we get this close here, we start the next candle, you do your risk management, and you start to actually don't just jump into the play. I'm gonna make that member in Discord proud, and I'm gonna say, hang on a second. Does this play have the potential for a 3-to-1? I think he might do 4-to-1, but a 3-to-1 risk to reward play. So before we make the trade, we need to evaluate what the potential move is. Like if we get the support down here, the potential move would be to
go to 2200, of course.
Yeah, go all the way up. On the 4-hour chart here, man, I don't like these pancakes here. It's not IHOP, but we'll use this guy. This is mega hard hat area now, but it's the method, not my actual markings. That's what I want to really focus on. Is potentially that's the high side. That's the next range we need to gain, but we don't even care about gaining it. If we gain this green range on the bottom, the probability is we're going to go test the next range. So we mark the next range up there. So you're looking at this developing down here, and you're like, I don't know. Do I enter? Do I not? Well, the price action, again, we're assuming this candle closes in the range. The price action is telling us it's worth trying, but we need to make sure that the risk to reward ratio is is worth it. So say we closed at 1876 here, technically in the range. Let's drop this thing down. This is a long tool, and we would say we're playing the swing to go test the bottom of this next range. So we're going to put that target up there at about 1903. And so we're going to say, all right, where do we need to put our stop loss such that we're doing a 3-to-1 risk to reward ratio? We're risking we're risking 1 to gain 3. And if we do that, this is telling us that our stop loss would be down here at 1867, which looks fair to me. And it looks fair to me for a couple nuanced reasons of if we hit this price, and then we're likely to continue to go lower. And I say that because we've failed. Now we're talking like a local high within these little swings here, but we failed to hold, this top here at 1869. We failed to hold the top of this. So yeah, that's a good place to have a stop loss. So we're risking 1 to gain 3. So that could potentially be a trade worth taking. And so that just is all to go back to the point of confidence. Confidence and understanding that nothing's guaranteed. So the things that put the probability in our favor are this time frame of 4-hour candles. And so again, this also needs to be considered as far as the mechanic you're using. Like you said, you're using options. This 4-hour time frame, I'm thinking like this is like a week kind of play. I mean, WEEK. This is a week week long kind of play here. 7 to 9 days is what I'm looking at for this play. That doesn't necessarily fit into your option style. So you would need to maybe adjust how you're looking at the chart, maybe stay on that daily time frame for looking for those options plays. But I don't know. That's kind of the gist of it. Probably already blew my chance at clearing anything up. But the short answer is confidence. And that's where I'm very much struggling, like I said, because I want to see the confirmation and then go, okay, now credit me my entry because I told you I wanted to see that. But, that's not how it works. You got to have the confidence to say the probability is in my favor. I'm going to take this. I'm going to risk mitigate with my stop. Now let's see what happens. So I don't know. I don't know that helps you at all, or if you are hearing that in a different way in the context of the kind of trade you're trying to set up.
It's helpful. I'm not really trying to set up a trade per se, just more gain my bearings and likelihood and probability of direction on it, and then consider trades after that. So I'm not even trying to use it to consider a trade. I'm just trying to be like, do I understand where this might go?
Yeah. So in that regard, I would, so if we just ignore everything as far as setting up a trade, and I'm not going to go back into the chart, we'll just remember everything I did. I think we can all clearly remember the monthly chart kind of showed that potential for making a reversal. And that was all based on the fact that we are now down at the critical bottom of that range that was on the monthly chart. And then when we kept digging in a little bit deeper, we kind of got some interesting points of, okay, so the monthly might be making a macro reversal, but none of that is confirmed yet on the weekly or the daily. So to me, that says, as painful as it is to hear, like to me, that says we're right on the cusp.
We're always on the cusp, man. There's always free beer tomorrow.
Yeah, we're always on the cusp. But like it's on the monthly, we're at the bottom of the range. So if there's ever a last call to make a turnaround, it's there. On the daily and the weekly, we're at the top of that channel that we've been trending in. So again, it's last call. If we're ever going to gain above that, now's the time. Otherwise, down we go. So, I mean, yeah, I feel you. I feel like it always comes back to almost find out tomorrow. But at the same time, I don't know. I guess that's where it depends on what your trade, what your thesis is, what you're looking for. Because, like you said, you're not looking to set up a trade. I mean, maybe that's what you get for asking for a crystal ball.
Well, you know what? We're just going to leave it at this. We're going to say, okay,
hey,
there's content in there.
Yeah. Hey, we leave it at this. And I can guarantee you we're right.
Yeah.
We left enough on the table that it could be going down, and we left enough on the table that it looks like it could be going up. And now we've covered our bases.
Yep. No, I think the closing candle and that last move and wrapping, that's a little different. I don't know. Maybe I'll try that a little bit more. Ironically, when I was kind of charting the Russel, I was zooming in on the weekly saying, hey, I like this weekly because it helps really define these ranges. And so I tried to look at the monthly, and you saw something in that. I felt like you were looking at clouds, man. You know how you look up at a cloud, you're like, I see an elephant. And I'm like, I don't see an elephant.
I mean, it was
but when you
a
pull
rough
up the
monthly.
weekly,
I will give you that. I didn't like that monthly chart much at all.
yeah. And you look at the weekly, and you're like, okay, I can get around this. Now, I arrived at similar lines, but I arrived at those lines not in the same way, and I don't like the way that I arrived at them because it was more feeling and looking. It wasn't objective stuff. So
Yeah. So
I'm all about objectivity.
I think, yeah, I mean, along those lines, the wrapping the candle, I'm not saying that's perfect or right, but it is objective, and it does give you determinism in how you go forward, because you can repeat that on every single chart. You can repeat that same thing. I struggled with it very slightly on the 4 hour when we had those pancakes. I was like, did the pancakes even mean anything? You can continue to try to read to figure out if they do, whatever. But the point I really, really, really want to drive is whether my actual execution is accurate or not at a very high level. What's the failure? And we need to regain that failure before we reverse. I mean, that's the kind of two high level things that I think if you just keep asking yourself those questions, find your own execution, or at least agree with the execution you're doing if you're copying mine or whatever. Because I mean, I'm just doing what I've seen other people do as well. Have a range and then keep asking those questions. What was the failure? We need to regain that. What's the range of it, et cetera, et cetera. And, the rest of it just kind of comes out of that. So the rest of that execution is just, what we do here, learning on the fly, how I'm currently executing. But I do strongly believe in those high level questions.
So that brings us to the end of this week's episode. Hopefully you might have picked up something that you didn't know before, or some way of looking at things that you didn't look at it before. If you made it to this point in the video, I probably will be myself when I edit it. We'll make it here. I don't know how many other people will make it here to the end. I should put like secret nuggets at the end of our video, like offerings and things like that, just to see if anybody ever makes it here. But
Comment.
that was a lot of content.
Comment frozen chocolate banana on this video.
Yeah, and frozen chocolate banana will win you something amazing, I'm sure.
Yeah, it'll win you up or down on the chart.
Well, if you comment frozen chocolate banana in the comment below, we'll review this and let you know how it turned out.
Yeah, there we go.
Anyway, it's helpful for me to see it. I think honestly, being in the Discord is super helpful. I'm very appreciative of the various charts and things that get put up there. I'm not clever enough or smart enough to basically be able to pull out the setups and put the little arrows on and share them in the Discord like some of the other members do in there. I enjoy that. And I'm trying to do it kind of on my own, but it's more like retrospectively looking back in the evening as I'm just kind of grabbing a chart and looking at things to see. And maybe I suffer from, look, I see what I want to see. But this has been helpful to run through this, so hopefully you guys found it helpful. The markets are always uncertain, as we very well proved here. At the end of the day, you can go up or you can go down. And who knows what'll happen? Flip a coin. But hopefully you gain something in here that gives a little bit of probability and likelihood of one way or another. And get out there, practice it. I know I definitely need to. So good luck out there. And remember, think outside the block.